consumer principle, which will require firms to act to deliver good outcomes for retail customers. In recognition of the barriers that many consumers face to pursue their financial objectives, the FCA wants to see firms deliver higher standard customer care and protection, and also to go further to equip customers to make effective decisions in their interests. So there were 2 consultation papers issued in 2001, and the FCA published a finalised guidance on the 31st of July 2022. And on that consultation paper, it actually took forward the vast majority of its proposals that it consulted on. And firms are required to implement the rules for open products and services by the end of July 2023, and for closed book business by the end of July 2024. And again, I will talk about the timeline in a bit more detail on the next slide. So the FCA has also set interim set deadlines, which includes for boards to agree implementation plans by the 31st of October 2022, and for manufacturers to complete all necessary reviews, open products and services by the end of April 2023. Now, these rules aren't just for the mortgage market, but it impacts all firms which distribute or manufacture products and or services to retail customers, and it actually forms a crucial part of the FCA's 2022-2025 strategy. And in that strategy, there are 2 main themes. One is governance and the other one is culture. So when they talk about culture, they basically are talking about what happens if no one's looking, or what's the habitual behaviours and mindsets that we have within the financial institutions. And when they speak about the governments, they're talking about the systems and controls in place within those institutions as well. So I'll move on to the first slide, which talks about the timeline. So as I've mentioned some of these dates already, as you're aware, on the 31st of July 2022, the final rules were published, and that implementation period commenced for on-sale products. Now, the next date for your diary is the 31st of October 2022. So just a little over a month away, and that's where company boards need to agree implementation plans, making sure that they're robust and deliverable. So that's the first date which you might actually hear from manufacturers. And again, also you need to make sure that everything is in place for yourselves in terms of the company to make sure that you've actually got the implementation plans in place. The next date for your calendar is the 30th of April 2023, and that's when mortgage lenders need to complete a review of all on-sale products. So that's where you're probably likely to hear a lot more from the manufacturers to say, well, this is what's happening in terms of consumer duty, these are the nuances, and this is what you might see that happens a little bit differently from our side of things. And on the 31st of July 2023, the next date for your diary, that's when the implementation period ends for all on-sale products, and the rules are actually enforced, and we need to make sure we're complying with consumer duty from that date forward. We do get an extra year for back book products. So again, 31st July 2024, that's when the implementation period ends for all back book products, and the rules are enforced for back book products on there as well. So a couple of dates for your diary. I'll stay on that slide for a little bit longer so you can make a note of those key dates for your diary. A couple of bits I just want to pick off. So 31st of October, that applies to all people within the chain and not just the lenders. So it is something you do need to consider to say, have we actually got a robust plan in place? If the FCA came to us and said, what's your plan for consumer duty? Do you have that in place? And again, on 30th of April, where I was talking about, you might hear a little bit more from manufacturers, so lenders, etc. That's where you hear more around sort of target market, what they're looking at and how they've implemented the rules. So that's where you like to hear a bit more between 31st of April and 31st of July next year is likely when you like to hear quite a bit more from the lenders in terms of what they're doing to make sure they are complying with consumer duty. So I'll move on to the structure of consumer duty. I'm sure we've probably all seen this little triangle diagram, as it were. So there are sort of 3 main parts to the structure of consumer duty. The first being consumer principle, the second being customer cross-cutting rules, and the fourth being the 4 outcomes that they're looking for. So in terms of consumer principle, so the new consumer principle is principle 12, and that will place principle 6 and 7 for retail customers, for retail business, require firms to act to deliver good outcomes for retail customers. That one's quite self-explanatory, so I won't go into too much detail on that. It's all about delivering good outcomes for retail customers. In terms of the cross-cutting rules, so there's 3 cross-cutting rules that you're looking for, which is act in good faith towards retail customers, avoid causing foreseeable harm to retail customers, and also enable support to retail customers to pursue their financial objectives. So when we talk about cross-cutting rules, that's essentially saying acting in good faith towards customers is doing the right thing for the customer. So we talked a bit earlier about the culture and basically doing the right thing when nobody's looking. So that's what they're talking about when they're talking about the cross-cutting rules, and also acting in good faith towards the customers. In terms of avoiding foreseeable harm, that's to customers by basically your own actions or omissions. So it's about giving advice and not order taking, avoiding behavioral biases, and taking into account the things that happen. So that could also expand things like protection life events, and also what can get between the customer and the desired outcome. So for example, if you've spoken to your customer and they said they want to own their home outright within 25 years, there's no point in giving them a 30-year term, and that sort of thing. And also about enable and support customers to pursue financial objectives. So it's understanding the customers and asking the right fact-finding questions and soft facts. So I know a lot of you are doing this already. The main thing around consumer duty is having that evidence that you are doing what you're already doing, because I know you're already doing a really good job with everything like this. It's also in terms of enable and support retail customers to pursue their financial objectives. Like I said, it's right about asking the right questions, so the right fact-finding questions, soft facts, and making sure that you're linking that to the customer and their understanding of the product. So for example, if the customer went for a 10-year fixed rate in this market, is that the right thing for them? And does that meet their financial objectives? And we'll talk a bit more about some of the other nuances that will come into that as well. In terms of the 4 outcomes, so you've got governance of products and services, price and value, customer understanding, and consumer support. So in terms of governance and product services, so it's about managing conflict of interest by way of remuneration or incentives or targets. So again, do you have the right policies and practices in place to make sure that you're not just recommending the products that pays you the biggest profit, for example? There's also about like CPD records, making sure that you're keeping them up to date and recording and making sure you're on top of your CPD and reviewing that on a regular basis to make sure you're up to speed on everything. In terms of price and value, one of the things that we sort of move towards is to say the cheapest mortgage is the probably best one. That's not necessarily the case, and the FCA want to have a bit more emphasis on price and value. So cheapest mortgage rule still does apply, but that doesn't mean it offers the best price and value. So what you need to do in that instance is consider price and value and link it to customers' financial objectives. So for example, overpayment options, the speed of service, and any features the client wants to and are prepared to pay for. So the case may be that the product is slightly more expensive, but allows them to make unlimited overpayments, which is one of the features the client's willing to pay for. That's something, again, you'll need to consider and make sure you're putting your recommendation and evidence in that you've spoken about and why the customer is willing to do that in terms of price and value. The other thing to consider is the total price of the product over the lifetime of the product, and also the nature of the product and benefits that it provides for that client that you're talking to. In terms of consumer understanding, that's all talking about the information you send to your client and the information you present to your client. So that could include things such as website content, any disclosures, your company brochures, social media. Is that all clear, fair, and not misleading? That's the sort of thing that we're looking for, or the FCA is looking for when they talk about consumer understanding. And all the communications actually tailored to deliver appropriate content in the way the customer can understand. So that's what you need to really consider. So when you're sending out your emails to your customers or sending out any social media or anything like that, is it clear in terms of what you're proposing to that customer? And in terms of consumer support, that's always talking about sort of the backward side of things. So once you've actually had a conversation with the customer, what are you doing in terms of things like the vulnerable customers? Have you got a process in place for that? To make sure there's no disadvantage to any groups, for example. Are your products and services provided as described, and also don't create unreasonable barriers like unreasonable costs, for example? And are products used in the way in which they are intended? That's all the sort of things that the FCA are looking for when it comes to their 4 outcomes in consumer support. So just to give you some key considerations, and again, this isn't a sort of holistic list, but this is just an idea of the sort of things that you may want to consider when you're looking at consumer duty in your firm and where you sit within there. So I'll talk about it from a lender and broker's point of view, and I'll give you a couple of examples on each one of us as to how that can be looked at. So In terms of price and fair value, so from a lender's perspective, what they'll be looking at to say is the product that's on sale, does that provide good value for the client? So, for example, they may be looking at ERCs, they may be looking at the actual price itself. They may also be looking at the features and benefits of that product on sale. That's the sort of thing that you'll be looking at from a lender's perspective. From a broker's perspective, you may be considering, okay, am I recommending the right product and to provide fair price and value? But also things such as the broker fee that you're charging, does that provide good, is that a good fair price and value for the client? So that's something to really think about. And just to remember, fair price and value is, applies to everyone within the chain. So it's not just the case of the manufacturers or the lenders need to make sure that they're giving fair price and value. It does apply to everyone within the chain. In terms of communications, I spoke about that a little bit on the last slide. So again, in terms of lender's perspective, it will just be about the things that we're sending out. Is it clear? Is it not misleading? And that's the same when it comes to your side of things. The things that you're sending out, any disclosures, any communications to clients, is it clear? Is it not misleading? Is it easily understandable? Is there no jargon in there? And that's what the FCA will be looking at for that. For your end-to-end processing, I know that's quite self-explanatory, but again, you may want to look at your end-to-end processing, and I'm sure that lenders and brokers will be the same. Have a look at your whole end-to-end processing and saying, is there any pinch points where we could do a little bit better? So I'll sort of tie this in with vulnerable customers, using that as an example. If you have a vulnerable customer sitting in front of you, do you have a process in place that you follow to ensure that you're tailoring your needs and also your recommendations and your process to ensure that you're looking after that vulnerable customer in the right way? So that's just one example. But again, there may be other pinch points where you're looking at things and saying, actually, we could record this better rather than doing a fact find in 5 minutes or 10 minutes or however long. You might want to extend that and say, okay, let me do a more deeper fact find to make sure I'm covering all the basis that I need to with my client. In terms of MI and evidencing, again, fairly explanatory, but that is a big crux of what I would say that the FCA is looking at when it comes to consumer duty. It's a lot of it seems like things that we're already doing, but it's about having the MI and evidencing that we're doing what we are actually doing. So it's all about having that on record and being able to say what you're doing and why you're doing it. So from a lender's perspective, again, we may look at MI to make sure that we're giving the right product, that is hitting the right target market, for example. And from a broker's perspective, again, you'll be making sure that you're giving the right advice, making sure that you're covering everything you need to do and you're evidencing what you're doing while you're doing it, which ties into the sales and advice piece. So the sort of last three, end-to-end processing, MI and evidencing, and sales and advice, all can tie into one, which is all around the sales and advice process. And have you got the right process in place? Are you recording everything that you need to be recording to make sure that you can evidence why you've recommended what you recommended? And if you sort of were scrutinized on that, would you be able to pick up all the evidence and all the processes to say, this is what we've done and this is why I've done it and this is why this is the right thing for the customer? So that's a real big point on there. Like I said, you've got an extra year for the back book, so that's not until July 2024. However, that is something you do need to start considering. And I think what we'll probably realize is that the consumer duty isn't going to be a case of, well, actually, it'll be implemented after a year and then, yeah, this will all be fine. It is something that is going to be ongoing, that you'll always have to be making sure that you're doing the right things, recording things in the right way. And it may evolve from when you first implement it to when we actually end up 5 to 10 years down the line, that in case that you actually end up doing more or slightly less or whatever it might be. But it's making sure that we have the right processes in place and make sure we're looking after those customers and the back book. I've already talked about vulnerable customers, so I won't sort of labor the point. But again, just a reminder to make sure that we do have a process in place for vulnerable customers and how are we actually looking after those people and are we evidencing how we've actually looked after any of their vulnerabilities in that advice process. Now, some things that you may want to consider when you are looking at these sort of elements is, do you want to have a consumer duty champion, or do you want to have a key personnel from all parts of the business to look at some of the nuances within each segment, say, are we doing this right? Looking at the advice process in detail and saying, is there anything that we are missing from when we move from literally the fact find to the application? So it's just a case of having a look at the advice process in detail and seeing what you can do to make sure you are covering all the consumer duty rules. Also have a look at all the contact points that you're talking about. So it may not just be, like I said, it's the whole chain. So it may not just be your advice. It may also be a case of having a look at the process if you hand over to an admin or someone who then chases the case once it's then through. have a look at that process and saying, does that actually meet all the requirements that we need it to? And something else that's obviously since COVID become a bit more apparent is remote working. So have we got the right remote working practices in place? Are we still moving out pieces of paper rather than keeping an electronic log, that sort of thing? How can we make sure that when we are remote working, that we're still offering the same level of service to our clients than when we're in the office? So that's another consideration to be thinking about. So that's my main parts on there and things that for you to consider. I won't take questions just yet because I know Rahaan's got a little bit of a piece as well. So he may answer some of the questions that you may have. So I'll hand over to Rahaan. I'll save your questions towards the end. Do keep them and what we will answer them towards the end. Rahaan?
Brilliant. Thanks, Jeffrey. Okay, you guys should be able to see my screen. Yep. Okay, so I'll be talking a bit more on the regulatory impact of the consumer duty. So obviously the consumer duty will likely be a focus point for the FCA in the coming year and beyond, especially during the firm review and visit period. So it will be important for your firms to prepare. So the FCA is looking to shift its supervisory mindset whereby it will make the consumer duty an integral part of its regulatory approach throughout the authorization, firm supervision, policy and enforcement processes. So this means that the FCA will consider the consumer duty throughout all of its work rather than a standalone regime. So the FCA is seeking to embed an outcomes-focused approach to supervision whilst retaining aspects of a conduct-focused approach. So given the FCA's overall approach, firms can expect the FCA to take a stricter approach to supervising and enforcing the duty. It is possible many firms are already seeing the FCA applying similar principles through its supervisory work, so being able to deal with vulnerability and evidence good advice will probably be more vital than others, in my opinion. So I think where the FCA has been clear that the new rules are intended as a step up in standards, with firms required to aim for good outcomes for customers when designing products, setting prices, providing support and communicating with them. These rules will obviously affect mortgage brokers, insurance brokers, consumer credit firms, amongst many which I haven't mentioned. So it will require attention from both and action from all to ensure compliance with how consumers are being treated. In the long run, the consumer duty should benefit all stakeholders and help advisors to demonstrate how they are delivering good value and services for their clients. The cost of implementing the required changes to comply with consumer duty will likely be a huge challenge for firms, especially considering the current state of the economic climate. So where smaller and medium firms may struggle on this side compared to your larger firms, though there's not actually a clear answer on how firms can implement the consumer duty in a cost-effective manner. But I believe being proactive and making a start on the implementation process, as well as your design and everything, can go a long way towards making a difference, given there's less than 12 months until the implementation deadline of July 2023. And also to take consideration that plans need to be submitted to the FCA by the end of October 2022. So looking at what firms can do, prepare. So with firms, you guys have the ability to obtain and use data from various consumer journey standpoints. Firms can use the data they hold to influence how they communicate with customers and how it will influence the offerings of services and products. Understanding what the customer needs is a big factor firms need to consider to be able to comply with and evidence good consumer duty practices. So using this data, it will enable firms to understand their customer base better, which in turn could help improve the services offered to those customers. The key message for firms, I believe, is being able to demonstrate compliance with the consumer duty. It's quite easy to say your firm is complying with the consumer duty, but if there's no actual hard evidence to demonstrate that you are, there's little information for the FCA to assess the firm against the requirements of the duty. So I think, as Jeffrey mentioned, a big emphasis should be placed on using analytics and MI reporting. Information available from such reports will be vital in all aspects for firms. The metrics available can help identify a number of key aspects that may not have previously been tracked. For example, using data for insights into broker behaviors, looking into the frequency of payments for high fee earning brokers who may be subject to more QA checks, simply because higher fees may equal higher risk. So a lot of firms may already be doing this, but whether or not it's being tracked, recorded, may be different. The same can also be applied for consumer journeys and consumer behavior during the application journeys. If the analytics identify customers spend more time on specific pages or questions than others, then perhaps firms can use that data to consider a review onto that part of the customer journey to improve the overall process and make it easier for the customer to navigate. So a big point firms should understand is that the data and analytics they produce and how they execute it is the evidence the regulator will look to first when having to justify a decision or an action. So the consumer duty does go beyond just doing the bare minimum of implementing changes to demonstrate compliance, but by really embedding the behaviors and processes expected under the consumer duty, firms can make a big difference for their customers, ensuring the service and products provided are exactly what they need and collectively raise the standards within the industry. So I've come to the end of my section and we're on to the Q&A section now. So is there anyone in the audience with a question for myself, Jeffrey, or Natalie?
We've just got a question here. So we've got a question that says, do you have any guidance on the definition of closed book products?
Jeffrey, is that one you might have come across? You're on mute, sorry, Jeffrey.
Yeah, so when you're talking about closed book products, that will be sort of ones where the lender may not necessarily be able to lend anymore. So in terms of the yes, yeah, exactly. So for example, that might be an old, for example, an old Alliance and Leicester product, for example, that might be something that you may have. If you don't still have a relationship with the customer, but you have to remember that the back book side of things aren't coming into effect until 2024. So there is going to be an implementation period throughout then. At the moment, a lot of the focus is on the new side of things that is coming out. So in terms of what you need to do for your back book, it is just a case of having that evidence to say what you did and why you did it. And if you haven't, sort of trying to put those bits together in case they do come back to you on those.
Thanks for that, Jeffrey. Then we've got another question about, will Finova be adding analytics to their broker CRM to monitor usage of the customer portals to help this type of evidence? So yeah, at the moment, Finova are looking at different developments that are needed in the CRM to make sure that you can evidence everything that you need to be able to in line with consumer duty. Obviously, as Jeffrey said, the MI and the evidence in it is really important. So we are looking to make sure that that ensures that you can remain compliant. So yeah, that is something, and we'll keep you up to date with those kind of developments. Do we have any other questions? Right, I think if anybody else has got any questions, if they want to type it in the chat. But if not, it looks like I think we've answered all of those now. So I think for me, I'd just like to finish by saying thank you to everybody for joining. It's been a pleasure to have everybody on. I hope you found it useful. If you do have any questions following this webinar, please feel free to drop me an email. I'll make sure that I'll contact you all so you have access to my details, and then we can look into those questions that you have and explore that further for you. I will leave my details up on the screen just for a little bit now, just so you've got access to those. It allows me to do that, sorry, bear with me. Yeah, so we've got my contact details are here, but I will contact you all, like I said, just to make sure you have access to those. I'm really interested to hear your feedback from this webinar, and if there's any other topics that you'd like to dig into deeper, we are looking to hold further webinars around consumer duty, so we'd really welcome any feedback that you have. I think we might have one more question, sorry, that's just come through. So other than CRM updates, are there any other changes Finova will be making in line with consumer duty? So at the moment, we're just looking at all the guidance that's been published, speaking with lenders, also speaking to brokers about what they need. So there will be different updates, different changes that will come into force. And at the moment, we're just kind of gathering that feedback, and then we're looking to have that in place as well. So we will be speaking to brokers and just asking for some feedback on what you feel you need to see as well. So again, if you've got any feedback on that, we'd really welcome it.
Yeah, and just sort of to add to that as well, just talk around the timeline. So at the moment, like I said, until the 31st of October, everyone's gathering all their information about what they're looking to do, and then basically have a plan in place by the 31st of October. It's a little over a month away. But in terms of it actually being in place, that doesn't need to be in place until the 31st of July 2023. So that's why you might have a bit of a gap. So yeah, any feedback to, like I said, because it's anyone in the chain, any feedback to whether it's lenders or to networks, etc., is always going to be welcome.
I'm just going to stop sharing my screen because I think somebody might have raised their hand. No, I think that's gone down there. Yeah, so I hope that's answered everyone's questions. But I think other than that, if there's no further questions, we'll end the webinar now. Thanks again, everybody, for your time. I'll be in touch with you. I hope you enjoy the rest of your day.
Thank you. Take care, everyone.
Thanks, everyone. Thank you, Jeffrey, and thank you for Rahaan for all your support too.
No problem.
Take care. Bye-bye.